You guys have probably heard the phrase draw on liquidity and forecasting price action, but you still may not completely understand how to anticipate or even look for draw on liquidity. And in this video, we're going to tackle all of it and make this the video that you've always been looking for.
Before we get into the video, make sure you guys are following me on Instagram, and that is Arkhamtrades. This is where you can find me, as well as the first link in my bio here on my Instagram, or the first link in the description. You guys can get access to my Patreon here, which gives you guys access to my private mentorship, daily forecasting, pre-market and post-market analysis for indexes and forex, direct access to me. You guys can ask me any questions or video requests and I will make them personally for you. Live trading for S&P 500, Nasdaq, and the Dow Jones every single day. My psychology and risk management plan plus daily trade breakdowns. If that's something you guys are interested in, that's the first link in the description or first link in my Instagram bio. All right, back to the video.
Alright guys, first things first here, draw on liquidity. Essentially what draw on liquidity is where have you come from, where are you at, and where is price going. The market draws to two things, and those two things are liquidity and inefficiency. If you can spot these two things in price action, you're already ahead of most traders. But you probably don't know how to anticipate this or even look for it in price action. That's what we're going to look at in this video here. But the brief overview of draw on liquidity is it's an area that price is reaching up into. So let's say there's a prior day's high. Price is reaching up into this level. So draw on liquidity can be a area of targeting, and it could also be a area of entry. So if you're looking to get in on a pullback, right, let's say there's a fair value gap down here, right, you'd anticipate your drawn liquidity to come down into this fair value gap for the continuation move higher. So it can be a means of entry and a means of target, but the basic overview is where have you come from, where are you at, and where do you anticipate price continuing to go. And that's what we're going to cover in this video. Gonna keep it very short and simple for you guys. So the first example here, we have the S&P 500. So the first thing that we want to take note of is where have we come from. So as you can see here, opening up, market opens and we see a massive drop lower. We see a massive drop lower here. Where are we at? We are inside of a support level. The support level being, let me make this blue here, this last down closed candle. This makes this level an order block, or some may call it a demand zone if you trade supply and demand, but it is typically a order block. So we've come from these highs, massive push lower, we're in a support level, which when price comes to a support level, what do? A move higher from the support level. You know, you buy at support, sell at resistance, classic retail 101. You know, you don't want to be looking for shorts here in a support level. So this is where we're at here, right? We've come lower, we're at a support level. Now where are we going? Where is our drawn liquidity? Remember when I mentioned price seeks two things, liquidity and inefficiency. So if you can understand where these two things are in price action, you're already ahead. What do we see here? We see a bearish M5 fair value gap. This would be our drawn liquidity. So we're anticipating price coming lower, right, into this support level, this M15 order block, anticipating price to find support here to then continue going higher, right? So that's our basic overview here. So what can we see in price action here? We see a little order fair value gap here. We see a fair value gap here. We can take this long here. Stop loss down here with a 2-to-1 take profit back up here into this fair value gap. Price then comes down, tags us in. And then it reaches up into our target, which is this bearish fair value gap as our drawn liquidity for a 2-to-1 R. Super solid, super clean trade. We're looking at the Nasdaq, right? First things first is, where have we come from? We've come from up here, down here, into a H4 fair value gap. So now this is a higher time frame fair value gap. So this is a H4 fair value gap, a 4-hour fair value gap. So we've come from up here down to a support level, right? So that's where we've come from. Where are we at now, right? We've come down into the support level, right? And then we've seen this push higher. This is where we're at now. We've seen this push higher from the support level. Where are we going next? We see these highs right here. We see these highs right here. We see even these highs right here. We see high, high, high here. These highs, and eventually back up here, is our draw on liquidity, right? So now we understand where have we come from, right? We've come from up here, coming down to a support level. We understand where we're at now. We see the push higher here from the support level, and we finally understand where our targeting is up here at these highs. Now it's time to get an entry. What do we have here? We have a order block here. We have an order block. So now we're anticipating price. Since this is a bigger order block here, I'm gonna use the 50% level. So we're anticipating price to come down into the 50% level of this massive M15 order block, stop loss below this low, and we can put our targeting above this high right here for a 2.5 R on this trade idea right here. Where have we come from? We come from up here down into a support level. We then pushed higher from the support level, meaning price found support at the support level. We pushed higher, and we're going into these highs. Now let's play this. Price comes down, tags us in, taps that 50% level, and then eventually comes up into these highs, and bam, just like that. Super solid, super clean. Next, we're talking about GBP USD on February 6th, so about 2 days ago. So where have we come from? We've come from these highs, and we pushed lower and taken out this low, right? We've taken out this low after coming down from these highs, right? Now, where are we at? We've pushed higher, meaning after taking out this liquidity pool, we pushed higher, right? That's where we're at. Now, where are we going? What do we have here? We have liquidity. Liquidity, these highs are liquidity. So we've come from these highs, pushed lower, taken out this low, right? If you were up here, right, let's say you got in a trade up here, your drawn liquidity would be down here into these lows. But after price came down and took out these lows here, our drawn liquidity is now these highs. The market goes from liquidity pool to liquidity pool, inefficiency to inefficiency. That's it. You know, like that's it. So price came lower, take out these lows. This is where we started. Where are we at now? We're at these highs, right? We're anticipating some type of push lower to come up into these highs. This would be our draw on liquidity. At the opening of this fair value gap, stop loss down here, and take profit up here at these highs for a 2-to-1 R, just like so. Price comes down to the fair value gap, and immediately comes all the way back up higher into our draw on liquidity. That's going to be it for video. I'm Arkham. Be safe.